What are you watching?
I'm actually watching a period film. Earlier I used to be completely glued on to thrillers. Now it's all about drama.
Well, as long as there's no drama in your real life, it's all good, right? So just like you're moving between genres, but your subscription is still there, it's a little bit like having a diversified mutual fund, isn't it?
You're sounding like me this time around, Sumaira. Just like a channel has different genres to keep their audience glued on, a diversified equity fund invests in stocks of different companies of different sectors to bring down the risk and maybe create a balance as well.
According to the latest classifications, the top 100 listed companies are called large caps, the next 150 are mid caps, and everything thereafter is small caps. So based on just the size of the company, the funds that invest in them actually can be classified into 5 categories. That's the multi-cap, the large and mid-cap, the mid-cap, and the small cap.
And as per the style of investing, we have dividend yield funds, which invest in stocks which have higher relative dividend. The second is contra funds, which actually have a principle of buying stocks which are not in the flavor and have potential in the future. The third category, which is a very new category, which is called the focused equity fund, which, as the name suggests, invest in fewer number of stocks. Unlike conventional large and mid-cap funds, which can have 50-60 stocks, these are restricted to a maximum of 30 stocks. And the last one, as per style, is the value fund, which invests in stocks which are lower at price today and have a very good future potential.
So don't get confused just because you're hearing this multitude of categories that you can use as your investment vehicles, because Feroze is yet to tell us which category is actually suited for which stage of your investment career.
If you're a beginner, you have to start with a multi-cap fund. If you have to make a choice of a second fund, then it has to be a large cap fund. The third fund could be a mid-cap, and the fourth fund has to be a small cap fund. These 4 are the most important 4 categories, and the rest of them can be ignored, and a person can actually create a portfolio and live with it, ignoring the rest of them for long periods of time.
So remember what your grandma said, don't put all your eggs in one basket.
Sumaira, it's important to understand the difference between sector funds and thematic funds. Sector funds are actually more specific. When it comes to thematic funds, they are a broader universe of stocks which can be bought. So this is important to understand because their risks are distinctly different.